Welcome back to the Retire Young radio show. I am your host, Joshua David, talking about financial literacy and how the smart money is utilizing these markets for income and retirement accounts. Also, don't forget to subscribe to the Retire Young podcast if you missed part of the show on Apple Podcasts, iHeartRadio, and Spotify. Be sure to leave a comment and anything you want to hear on the show next week. So, Al, as we were talking about how the smart money is creating income, they're using the stock market. They're using the futures market. Now, we didn't get into a couple other assets that they like to use for income, but a lot of them, they're also using those for retirement accounts as well. We have a retirement crisis. We've been talking about that for several weeks. But here's the key. We talk to a lot of people that are coming to these investing classes, and some of the key, I guess, common things that we hear is they're frustrated. They're frustrated with their returns. They're frustrated with their advisors. They're not doing what they ask them to. And we're not talking down on the people. It's the industry. So, Al, let's talk about that. What is the smart money doing a little bit different, and how can we do the same thing?
Well, the smart money is not investing in the same things that they're putting their clients into. And typically, a client of a financial firm is put into either individual stocks, mutual funds, or annuities. And what the institutions themselves are doing and the pros are doing, the big players out there, hedge fund managers, they're not buying mutual funds. They're not buying and putting together long-term buy and hold strategies. They're trading things like the futures market, which is, by the way, that trades almost 24 hours a day with great leverage. They're trading in the foreign exchange market, and that happens to be the biggest financial market there is. $5 trillion a day trade in that market.
That's bigger than all the stock markets in the world
combined. That's right. And that is open 24 hours a day with great leverage, 50-to-1 leverage, which is phenomenal.
Now, think about that. That basically tells us as investors we can trade and invest any time of day.
Or night. That is correct. And a lot of people that are still working, their hands are tied because they are working during the stock market hours. And if you're trading futures or Forex, that really doesn't make any difference because you choose when you want to trade. And by the way, that's part of a plan should include what the best time of the day or night is to trade for yourself. And we have some people that do better in the morning, some people that do better in the afternoon. But that's all part of a plan that is designed to help you, kind of simplify things and actually have better opportunities based on your particular goals and your personality. But, we talk about this retirement crisis, and why is there a retirement crisis? Well, very simply, it's because people retire with an inadequate amount of money. Why is that the case? Well, some people don't save enough while they're working, and if you're when you're working and your job is providing enough money just to pay your bills, so you're living basically paycheck to paycheck, it doesn't leave a lot left to save for retirement.
Yeah, so you may need to do something a little bit different.
Right. And a lot of the financial advice out there is, learn to cut back on your lifestyle or maybe work overtime or get a second or third job.
That's a snoozer.
Well, it's a snoozer. Why deplete or decrease the quality of your life while you're young, while you're working? And if you don't have to do that, well, maybe there are other ways of kind of boosting the income that you have, boosting the cash that you have. Some people look at things maybe like real estate. There are a lot of people, and those are the people we're seeing coming into these classes that are looking at the financial markets as a potential opportunity. And then a lot of people simply don't understand or use their 401ks or 403bs properly. And when we talk about 401ks, we typically we're talking about all employer-sponsored retirement plans. But that may be the biggest, the most important thing that people have when they go into retirement that is going to determine the quality of their lifestyle for maybe 30 or 40 years after they retire. And a lot of people just know that money is taken out every couple of weeks. Every time they get a paycheck, it goes into something. And, they've kind of been conditioned to believe that there's going to be a lot of money there when they retire and they don't have to worry about anything. It's kind of like, putting your investments on cruise control. Well, those can be managed and they can be, you can actually trade within those accounts if you understand how to identify, when something is maybe moving into an area that there will be sellers or when something's moving into an area where there will be buyers.
Well, I'm glad you brought that up, Al, because a lot of people, we hear so many times people don't even look at their 401k. And it's not just because, I think it's probably because they just don't understand it. And that's why...
Or they're afraid to look at the numbers.
Or they're afraid, correct. But, that's why it takes action to make changes. And you talk a lot about the 401k. We know you teach a lot of these investing classes, but you get a lot of questions about the 401k, how they work, the different opportunities that you have with those. I mean, there's certain things you can do. You have to talk to the company sponsor. But if you want to understand more about those, come to these investing classes. Al dissects the 401k, even the IRA, any company sponsored plan as well. Al, as we talk about retirement, there's so many, I guess we'll say there's so many money managers out there. People just don't know who to use, really who to trust. You see these commercials, trust your advisor, right? Well, they're conditioning people to say those words, right? But here's the problem, is people don't trust them. And they're not sure what they're being put into. A lot of times we're hearing that they're not even doing what their clients are asking them to do. So what's one way you can eliminate that? You can self-direct your retirements. Now, it may sound like a scary thing for a lot of people, not because it's different. It's just a little bit new, right? Now, talk about that. Talk about the benefits of self-directing your own account.
Well, think about it. And a lot of people are thinking, well, if I self-direct, that means I have to make the decisions. I have to make the choices, and I don't know how to do that.
Aren't they already doing that?
Well, that's exactly what I was going to say. Think about that. With your employer-sponsored retirement plan, who is making the decisions for you? Who's making the choices? You are. And a financial advisor, a Wall Street firm will come in and set up a retirement plan, give you some choices, and then you're making those decisions. With some of those companies, you might have maybe one meeting a year. Most of the people we're seeing have no meetings. They can't even remember having a meeting with the plan sponsor. So all of the decisions are being made by you anyways. When you self-direct, you can do the same thing. You can use the same investments that are in your 401k or 403b, but typically they're mutual funds which are giving you mediocre returns with high fees. When you self-direct, you don't have to use mutual funds. You can use stock. You can use the futures market. You can use the Forex market, which is the foreign exchange market. You can use options. We mentioned ways of making money or participating in a down market, with shorting being one. Well, you can't short in an IRA, but you can do a couple of other things. You can use, and I think you mentioned inverse ETFs.
Yeah, well, what is an ETF, though?
An ETF is an exchange-traded fund. It is similar to a mutual fund. It's a basket of stocks, but it trades like a stock. You can buy and sell that during the day, which you can't with a mutual fund.
And lower fees.
Lower fees, almost non-existent fees. And there are inverse ETFs that go the opposite direction of the underlying. So, for example, if you are looking at participating in the S&P 500, there is an ETF called the SPYDER, SPY is a symbol, that mimics the S&P 500. So if the S&P is up 10%, that should be up close to 10%. There's an inverse that goes the opposite direction. So if the S&P 500 was down 10%, that inverse ETF would be up about 10%. You can use those in your retirement accounts. You can use options. There is an option that will go up in value as the underlying asset that you're trading the option on goes down in value. It's called a put option.
Yeah, and the great thing about options as well is they also have leverage. They have buying power. So investors can buy a stock at a fraction of the price because you have that leverage. So think about that. If you can use leverage in your retirement accounts, how could that change your retirement future? Now, the problem is people work all their lives and put their future in someone else's hands. That's why it's so important, and we're seeing a lot of people come to these investing classes that want to self-direct. They want to understand how these really work before they do it, learn this knowledge, learn the skill, and then start to take advantage of these opportunities. And there's opportunities every single day in these markets, and the markets are going up a lot, many percent here and there. They're also going down 1% here and there. So there's movements both directions. Now, also, like you were talking about with options, there's strategies for sideways markets. So that way, we talk a lot about, these down markets and people lose time. Well, there's opportunities in these sideways markets. So that way you don't lose that time of investment. Now, coming up in this last segment, we have a lot more to discuss. One thing we haven't covered yet is fees.
Right.
Fees in retirement accounts and fees everywhere. So I want to talk about those fees, what they are, but I want you to really dissect how can we start to eliminate them, lower those fees. This is Josh and Al with the Retire Young radio show. We will be right back.